Hello everyone, thanks for joining us here on Horizon. Well, the national economy ended the year on a high note. Unemployment hit a 5-year low, beating expectations and creating over 200,000 new jobs. Consumer spending also grew for the past 2 months, exceeding forecasts. Good news, any way you cut it. But can it be sustained? And how is Oklahoma doing compared to the rest of the nation? We begin our show and the year with our annual Economic Outlook.
2013 was a good year for Oklahoma's economy, but not as good as it has been.
Well, most of the softness has occurred in the energy industry, and it looks to me that it's in the non-metro portion of the state.
Dan Rickman is an OSU economist and says he expects to see a pickup in job growth of about 20,000 new jobs in 2014. That follows a slowdown last year in the rapid growth of our state's energy jobs due to recent advances in technology.
Where we've had increase in productivity, we don't need as many workers in terms of the number of rigs and wells being drilled. Technology has always been that way, but it always creates, wherever it displaces something, it always creates other opportunities.
Rickman was one of several speakers outlining where the jobs will be in 2014 at the annual Economic Outlook Conference. Chad Wilkerson heads the Oklahoma City branch of the Federal Reserve Bank and says while state unemployment remains drastically lower than the national rate, for the first time since the recession, Oklahoma job growth lags that of the nation.
We've been growing a little bit slower than the country as a whole. We have a bit more federal government than the nation. Of course, that's taken a bit of a hit this year. Energy activity has also slowed in terms of employment and drilling. Production is still pretty strong. Now, nationally, the economy has continued to grow. Unemployment has come down, but we're not expected to get back to what you might consider full employment levels until at least 2015, 2016.
Wilkerson says that's because the state remains highly dependent on energy and aerospace jobs, two sectors that have slowed, but for different reasons. Energy is a global commodity and one that rises and falls due mostly to factors outside our state borders. But for aerospace, where many of those jobs are federal, the lagging growth in the sector is due in great part to what is going on in Washington.
It continues to be a good amount of uncertainty about fiscal policy. It seems like fairly low odds of another government shutdown or sizable sequestration, but I'm an economist, not a politician, so I really don't know how to guess, and it makes it difficult to forecast, not just as an economist, but it makes it difficult to forecast as a consumer or a business as well.
Sort of a self-inflicted wound, courtesy of Congress. Despite such negatives, both Rickman and Wilkerson are positive on the trajectory of our economy.
And it's done well despite all the setbacks from the government sectors. The private sector's been doing well, and it's continuing to gain momentum despite what government might be doing.
I think in Oklahoma there's still pretty solid fundamentals. Energy is still our driving sector here. Prices are still solid for oil. They've increased probably even more than expected for natural gas, even though they're still fairly low. We still have a number of energy headquarters of businesses that do activity not just in Oklahoma but other places. That's solid. A risk would be federal government. We do have a good amount of federal government, especially defense. So that would be one risk, but I think overall the outlook is fairly good.
And it is a recovery that for many Americans is proceeding at a very uneven pace. According to a Washington Post Miller Center poll, there is still plenty of anxiety among workers over losing their job. If you will, let's take a look at some numbers. When it comes to job security, Americans are pretty evenly divided into thirds. About 32% worry a lot, 30% a little, and 38% not at all. But those numbers change pretty dramatically when you look at household incomes. Now, 54% of workers earning $35,000 or less worry a lot about losing a job, 21% a little, and compared to 25% that don't worry at all. But look what happens when household incomes rise. For those making between $35,000 and $75,000 annually, those that worry a lot about losing their job, well, it drops down to about 30%. And when incomes climb above $75,000 a year, people are feeling even more financially secure, with just 17% stressed out over job loss, while almost half of high-wage earners surveyed report no worry at all about losing their job. Now, later in our show, we'll talk more about the impact the constant partisan infighting in Washington is having on our national and state economy. But when we return, a closer look at our rural economy.